this is a talk that's going to give you a little bit of an idea of just the sheer growth of this industry. And we're going to retrace the growth in powers of 10, like orders of magnitude. So let's get started. Oh, by the way, my background is actually in tech. I'm not a finance guy. I got into this area of research. My area is to read the blockchain ledger for market structure, and that's purely through, as a tech guy looking at what's new in the space. So let's get started. So as most people here know, on 3rd of January 2009, there was one user on the Bitcoin network, and that was Satoshi Nakamoto. He laid down the Genesis block, and that was the 0 to 1 moment for this network, Bitcoin. And so to go 10x to 10 users, it took 8 days, and then the next 10x took 8 days, and then growth leveled off, and it took another 5.5 months to get to the first 1,000 users. And so at 1,000 users, something pretty magical happened, and that was liquidity hit the network. So New Liberty Standard was the very first marketplace where individuals could, for the very first time, buy Bitcoin without having to be a technologist, without having to install the software, mine new coins into existence to actually own it. And so that actually created the first juncture where the exponential growth of Bitcoin started. And you can see that in this chart here, right? So this is a log chart on the y-axis here. We're growing in orders of powers of 10, right? So when you see this sort of curve this way, sort of logarithmic curve, that's linear growth. When you see a linear trend on this type of log chart, it means you're running away exponentially. So this was the point in which Bitcoin and this industry started to grow exponentially when markets, liquidity hit the network. So that was 1,000, and it took another year to get to 10,000. And so 5.5 months, so 6 months to get to 1,000, 1 year to get to 10,000. At 10,000, Mt. Gox came onto the scene, and for the very first time, the whole international market could buy Bitcoin. You could wire money to Japan, buy coins, and wire it back into your wallet. Took a year again to get to 100,000, and to get to 1 million, 2.5 years. So by this journey of going from 1 million to 10 million users, I would say Bitcoin hit a bump in the road. Mt. Gox got hacked. In that hack, 1 in 8 Bitcoins in existence got stolen. And then that led us into a very kind of long, protracted bear market. And during that phase also, there was a governance war on Bitcoin, and like a group tried to change the block size. There was a whole number of like fighting within the ecosystem and direction of Bitcoin. So that led to 3.5 years for us to get the next 10x. And it also was the first real show of resilience for this network. And so then another 3 years, a lot quicker, to get to 100 million. So where we are right now is the 10x journey from 100 million to 1 billion users. So in this phase of the market, we're really seeing the very first, actually it was in the pro market. Here we go. In this zone here, we're seeing the very first futures markets develop and the very first signs of institutional investment. And so here where we are now, we're like seeing corporate treasury adoption, public markets develop where we can buy this asset class from a brokerage account, in your equities portfolio through ETFs, additionally through the first of the publicly traded companies that hold Bitcoin in their treasuries. And this chart here shows you just a little bit of like insight to how quickly that's grown. So this yellow trace is really the combined amount of Bitcoins that now sit into publicly traded vehicles, ETFs and public companies. So through this whole arc, we're starting to see efficiency come into the market. So Bitcoin is like a 24/7, 365-day traded asset, and like what you see here is some data that comes from our fund, which is really mapping out effectively the inefficiency in the market and how much gains you can get by extracting that inefficiency. So here, even 1 to 2 years ago, we were able to, as like a quantitative trading firm, pull out more than 100% annualized return, and that started to compress down, and right now it's single digit. And so it gives you an idea of just how efficient these markets are becoming in the last 2 years. And with that kind of efficiency, it's led to the first sovereigns to come in. El Salvador, obviously, who adopted Bitcoin as legal tender for that country. And so overnight, 40% of the population downloaded that wallet, and within 8 months, 20% continued to be active users, which compares very favorably against 25% of the population having bank accounts. So in 8 months, they grew the wallet adoption to almost the banking penetration rate. And with that, we've seen a 52% increase in tourism. So of course, if you go back to this curve where we are right now, it's around 400 million people that have exposure to this asset class. And so suddenly, when a country decided they would adopt Bitcoin, their tourism jumped up 50%, because with that comes this huge community to back it. And so this is a zoomed out view of the adoption, and I've put it up against the internet and of course world population. And so one of the things we love to do as analysts is to throw it on a log chart where you can see the trend, and that's actually Bitcoin against internet adoption. It's actually the fastest technology adoption curve that we've seen. It's faster than internet, it's faster than mobile phones, it's faster than radio, TV, and electricity. So it's very surprising, right? Like, and this is a 14-year trend of this adoption curve. And how we're measuring this is, originally in the early days, we can just look onto the ledger, and you can do forensics, and you can cluster together the address spaces and then the interactions between the transactions between these wallets, and you can see and resolve the individual users on the network. And that starts to fall out within weeks, but after 2 years it gets very, very reliable, and going back 14 years it's very accurate. And so this part of the arc, we're measuring it on chain. Somewhere in this zone here, exchanges start to take over, and the ratio of people that hold their coins on exchanges, which you can't really see on chain because all you see is just one big wallet. You can't actually do that. So the Cambridge Centre of Alternative Finance came in and surveyed the entire industry, looking for uniquely identifiable users, KYC'd users, and they deduplicated that and found that this was the lower bound of the estimate. And adding together, what I did was I added together the on-chain users and deduplicated that. So this is like actually the lower bound estimate of the users. And so this data is relatively accurate, it's and conservative. And what's surprising is we've got a 14-year trend here, and we can pan that forward. So we pan that forward. The surprising outcome is that this dot here is 1 billion users, which is 12% of the planet having exposure to the asset class. 12% of the world will be using Bitcoin if this trend follows and continues its current trajectory. So, this kind of adoption S-curve has some implications. I'd like to zoom out and we'll look at the 10,000 year view, right? Which is kind of, I think, I tweeted out in 2017. And so, really is like, this is money, right? We started off buying things with commodities, gold, silver, cows, sheep, and then that was very much in the agrarian age. As we move into a more complex society, a much more complex economy, this moved into the gold standard, where we have a store of value, gold, and we're trading kind of paper receipts around that gold. And obviously it's a little bit hard to ship commodities around, so much easier to move paper. And we went fully into paper in 1971, where we decoupled from gold itself. So that's our arc, and this is really a technology story, right? So in this green zone here, we're going through the post-industrial revolution, where the next age happens, which is, I would argue that we're in it now, that the invention of Bitcoin completed the digital revolution, the ability to put onto the internet a native scarcity that's programmable, which was thought to be impossible, but that it is now available. And so this is the view where all of finance moves onto blockchains and moves into the internet. So, and I'd actually layer this on top, which is, how did we organize as a society? And we went from hunter-gatherers to our first kingdoms run by royalty, kings and queens. And I find it interesting that we organized as nation states as we moved into the industrial age. And right now, we're at the peak of nation states. Like, there's a lot of conversations about how do nation states regulate crypto, right? And we in this industry are somewhat concerned that will we be stamped out, will this industry be stamped out, or will it be shaped in particular ways? But if you think about the nation state, right, it's basically a boundary around a jurisdiction. And the whole point of this green block, which is moving everything into a digital space, with which even finance itself has gone into this digital world, it doesn't see boundaries. And so as nation states are regulating crypto as if it's another asset class to be managed, crypto could be seen as regulating the power of a nation state to define its borders. And so if you look at that, you can see that it actually makes the nation state paradigm obsolete. And I think that what's going to happen is that nation states themselves are going to be like what royalty are today, which is a vestigial organ of the past. So there's a new era that we're starting to see come about, which is a new way of organizing post-nation state. So, I mean, that's a view on it, where we're seeing a lot of control being fought for from the old paradigm, yet I don't think many people are seeing that this whole thing becomes irrelevant in, say, another decade, when you look at this kind of arc. You have 1 billion, and then a final 10x, which is the world population inside this world. So, and then really this is a lead-in, a segue into the final part of this talk, very quick talk, and it's really what might that look like. And this tweet from 2017 said, Bitcoin is not just money, it's the invention of an internet-native digital scarcity, and with that breakthrough, software will eat the financial world. And there's kind of a question mark around what that actually means, right? Because what does that mean, putting finance onto the internet? And so I would say it takes 20 years for any technology or any medium to find its native expression. And so when TV was invented, the first TV shows was radio shows with pictures. And it took 20 years for the sitcom to come about, right? That was one of the native expressions of a TV medium. And we saw that with the web, right? When the internet came out and got its first traction in the mid-90s, all those websites were really just print. It was like online catalogs, it was e-zines, newspapers being digitized and put online as digital documents. And it took 20 years for social media to come about, which was a native expression of the web. And so right now, within our industry, what do we see? We very much see traditional finance that's just put on internet rails. We're seeing currencies and assets being put onto blockchains. We're seeing decentralized exchanges. It's very much lending products, DeFi. Yet, like, we're only like half to 2/3 of the way through this 20-year journey, and I think only now do we see some interesting things that are starting to happen, right? And the Lightning Network is at a point where we can stream money across the world as if it was a YouTube video, and what implications does that have? We're seeing communities develop with DAOs and governance tokens. We've got NFTs spinning up. Like, everything's becoming digitized and in new ways. And I think that even now, 14 years into this industry, we're only just starting to understand, not even understand, we don't know what this native expression will be. We're just having experiments around it. So the point I want to get at is that we don't really know what putting finance onto the internet looks like, but it's not going to be traditional. It's not going to be traditional banking and traditional financial products. So I think it's a very, very interesting time that we're in. We don't know where it's going to go, but one thing we do know is that given the very, very reliable adoption S-curve, that this will be a part of everyday lives. I think everyone here understands that, but the rate of which that's happening is ridiculously fast. 3 years to $1 billion, and then maybe another 10 years, and that is it, right? What do we build onto this medium? That concludes the talk.